But what's different this time around is that institutional money is here in a way that it wasn't during past bull runs.
The Blackrock Bitcoin ETF has bought more Bitcoin than was mined every single day since the ETF was launched. The red line equals the 900 BTC that was mined per day, dropping to half that in mid-April. And the blue represents just what BlackRock is buying.
They've also been setting new records. Collectively, in the last 2 months, those 10 U.S. spot Bitcoin ETFs have brought in $50 billion.
So BlackRock's not alone. Institutions are buying Bitcoin like crazy. And just recently, as of 2 days ago, the Bitcoin ETFs registered the largest net inflows, over $648 million, since day one, meaning the supply is getting gobbled up by institutions with at least a 10-to-1 ratio.
I think that sometime in the next 12, 18 months, Bitcoin can be over 150,000. But that's because, the backdrop for Bitcoin is so much more favorable today. We've got more visible demand from the spot ETF, and we know the supply dynamic is improving with the halving coming up, which is less than a month away. It does help that the Fed is becoming dovish. I mean, that's easier monetary policy. And I think from a regulatory perspective, we had so many hammers dropped in the last 12 months, really 18 months, that unless it's going to be worse over the next 2 years, Bitcoin's already faced sort of the peak of regulatory backlash.
Now, the only thing that could slow Bitcoin in the short term is if traditional markets crash.
It's a study we did several years ago showed that the best years for Bitcoin occurred when the S&P and the NASDAQ had their best years.
Now, in 2023, the stock market had a great year. 2024, an election year, is looking better.
The stock market seems a lot stronger this year than last year. We've had 4 consecutive months of gains, which Mark Newton, our head of technical strategy, says is very rare. We already had a pretty nice January, a very strong February. To me, if the market gains 20% this year, which would match what it did in 2023, it wouldn't surprise me. But I think that the character would be very different, that it would be a lot more sectors participating in. In some ways, I think if we are up 20% this year, I think small caps could be up a lot more, as much as 50%.
So we're not going to have a down year.
Let's get to lower cap crypto coins in a second, but this is important. Make the best decision for you. What's the counter narrative to everybody's bullishness?
I think 2 things would probably derail an equity move of 20% this year, something even pushing the markets down. One would be if inflation reasserts itself in a way that the Fed has to reverse its action and become quite hawkish again. I think that would terrify markets. The second is if monetary policy is so restrictive now that we slip into a recession. I don't think we're losing that much economic momentum, but either would be negative for stocks.
Of course, Fed Chair Jerome Powell went on the record yesterday in front of Congress and said, confirmed, they will not be raising rates.
We believe that our policy rate is likely at its peak for this tightening cycle.
And also cuts are coming, which are good for markets.
After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We've also continued to shrink our balance sheet at a brisk pace and in a predictable manner. A restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
Now, again, if you get a supply squeeze to this magnitude, it doesn't matter what the stock market does. I mean, Bitcoin today, as I record, Bitcoin literally is just 2% away from breaking all-time highs.
I know our digital strategist, Sean Farrell, said that it's typical to consolidate after making a new high, so he thinks for the next 9 or 10 days we're going to be maybe chopping around here. But we saw it with the spot Bitcoin ETF inflows, like, BlackRock seeing almost 800 million in inflows. So I think as long as there's strong spot demand and there aren't eager sellers, you do have a market that's out of balance, that there's too much demand for Bitcoin, not enough supply created through the block reward.
And as we look at altcoins, a couple of airdrops to keep on your radar. Number one, Commonwealth. We've talked about them before. We're partnered with them. They are airdropping around $2.4 million in VC allocation to hot, unlaunched Web3 projects for free.
And we want Commonwealth to open up that access to everybody.
For a large majority of people, access wasn't possible until today.
So it's a 2.4 million starting value.
And the news today is just under 6 days left to join the elite and take home around a $10,000 slice of a VC fund. Now the catch is, number one, be sure to use our code. It's linked down below in the video description. And number two, there are 45 mandatory missions, completely free, to get rewarded. If you think you missed out, you have not. 6 days is more than enough to scale the leaderboard. And airdrop number two, and this is actually a crypto game, a project we're invested in. It's called Star Heroes, the first multiplayer Web3 space shooter for esports, backed by Microsoft grant. As well as over 400,000 pre-registered players. So the hype is here, the excitement is real. And this, you actually do only have one more day. Star airdrop campaign. Final reminder, act now. You only have until tomorrow, March 8th, to secure your Star airdrop. Own tournament map shards and become a shareholder of Web3's largest esports tournament with a $1.3 million prize pool. Again, investing in cryptocurrency in general can always be very risky, but whenever there are airdrops, I'll always try to let you know. And then an interesting announcement from Gala Games and Amazon Web Services gaming arm. We're collaborating with AWS Game Tech and Alienware for an epic hackathon at GDC. Dive into Gala Chain and build for a 24-hour frenzy for your shot at a piece of the total prize pool worth $1 million. So this one is more for coders if you're in San Francisco, but to me, it's cool that AWS and Gala are collabing. And as reminded by the Cody CEO, as a reminder, Cody is a privacy-centric Ethereum L2. As tweeted out by the CEO, Cody Network has an unbelievably strong community. We have an upcoming Cody V2 airdrop coming, and we have posted a survey asking the community for how long they'll lock their tokens. Reminder, they don't have to. But for me, what I found most interesting, on a recent Spaces, the CEO describes Cody's journey.
So yes, in 2017, we aimed to solve payments, and we realized quickly that we need completely new infrastructure because it still is, by the way, almost impossible to do payments with Bitcoin, and Ethereum was very slow and expensive. So we needed to build something that is far more scalable, and then we came up with our DAG infrastructure and proof of trust consensus and everything that is Cody. As time evolved, we've realized a few things. One is Ethereum is basing itself as the leader, and we want to be part of this ecosystem and tap into all the tools that everybody already built. Solidity, that became quite a standard. And obviously liquidity, security, and everything that comes with Ethereum. So we wanted to align with this. And the second thing that has happened is that a lot of our clients and enterprises always mentioned confidential computing, privacy.
Be sure to grab your tickets for the